All right, Tuesday, November 5th. I know the date because it's my wife's birthday. That's the highlight of the date. Don't forget your wife's or spouse, well, your wife's birthday. I was going to say your spouse's birthday, but it's more important not to forget your wife's birthday than for a wife to forget their husband's birthday. Before I go down that path, get myself in more trouble, let's talk about 9 o'clock Central. 9 o'clock Central was important because a number came out that really didn't miss by much. Again, this goes back to understanding what should happen and what does happen. ISM non-manufacturing comes out 9 Central, and it doesn't miss to the upside by much. Number one, you got to know what's not much, and you look at a consensus range for expectations for this number, and it was within that consensus range. Most people just look at estimates. Well, what's the range of expectations? 52 to 55, and it missed, but it missed inside of it, so it wasn't a big miss. However, right at 9 Central, we popped, and popped pretty good right here. It doesn't look like a lot, but it was, let me open it up. It wasn't doing much. And it had this first jump, not right here, actually right here. A jump from like 76 to 70, 74 rather, to 78, 79 even. And it stopped there for a second. The reason why I wanted to go back to this is that, let's really open this thing up. You could see it a little cleaner. This is the pop in here. Looks like, well, that's the 9 o'clock pop. No, that's the second one. The first one was right here from like 75 to 78, 79. And a 3-4 point move, the way we were moving really slow, was good. I thought, hey, this is a good fade because it really shouldn't have popped this much. It got a little excited, whatever, inside that yellow area. And I wasn't wrong to the tune of a few ticks until I thought, wait a second, we should start going back to where we started in here sooner. And I'm looking around. It's one of those things where it's not doing what it should do. It's not doing what it should do. It's not doing what it should do. Not doing what it should do. Get out. So I'm not still short when it's way up here. I could get out for a small profit and a small loser on the balance in those two circles instead of wondering what the hell's going on way up here. All right. First pop really shouldn't have happened. It should go down. It's not going down. They're validating this pop. You look at the ancillaries and you get that jump. And there was reasons to get long. And if I said to myself, I wasn't sure, I'd been long in there. Still not a bad trade because I got the hell out of it and admitted I was wrong without a loser. And that's important. Now, this move didn't come from it being overbought or expensive necessarily up there. It came because there was some news that China, just wasn't that optimistic about an entire deal being done with the U.S. and the whole U.S.-China trade war. And so the market is still sensitive to both positive and negative news, especially negative news with this trade war because we're up at these historic highs baking in a phase one deal. So any hint that there's not a phase one or any hint that phase 2 and 3 can't get done, you get this price action in stocks. It's important to know that in there, and we're in a room that if I don't catch it, someone does, so you're not fighting it, trying to buy it all the way down as the market just continued to drag lower, sideways to lower until it found a base, it started to go up. But at least you're not fighting it. There was some fundamentals that turned it around from up here down to retrace or retest what had been the session lows from after the open. So really important recap. A number came out. It's a little bit more watch because of some of the data coming down the pike. It didn't miss to the downside, so it was a relief rally. Actually had an upside miss. Was too much. The reaction was better than I thought, so I faded it. But then I realized the fade didn't work. Get the hell out, and I was not subject to the rally into here. And then understanding that there was news that drove us lower. So you don't have to always catch every single thing, but you better minimize what you miss. You better minimize what you miss. You're going to eliminate what you miss? Never. But you have to minimize what you miss, whether it's news, whether it's being around people, keeping you privy to what else is going on, other markets, some sort of stuck buyers, shorts are puke and longs are puke. Whatever they're getting, you need to know, get, understand, and try to run with. Don't think you put yourself around the right people by just subscribing to my YouTube channel or a YouTube channel or a forum. I think it's better than nothing. But when people are in these communities and forums, they're generally, if all they do is spend time in, and I'm not beating up on forums, I think there's some really helpful forums out there. But if you spend a lot of time on them, then you probably have to walk upstairs to exit your house because you live in your mom's basement. We'll see you guys tomorrow. And by the way, those that, well, you guys aren't going to get it if you're on YouTube channel, but we have an important edge meeting for trading room guys and edge guys at 11 o'clock, less than a half an hour from now. Make sure you guys get in there.